Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 17th of December. Now the dust is now starting to settle on this absolute bonanza of central bank decisions that we've had in the last couple of days. Markets have been having increased volatility on the back of all these moves. Where do we start? Well, the Federal Reserve, a little bit mixed actually. The Fed was a little bit hawkish on its statement, but dovish on Powell's press conference, and that sort of created a bit of a risk-on appetite, but that was continued through the morning yesterday. But then into the US session, you had some selling pressure once more. The sellers coming back in as seemingly the market just unable to really find that traction in a breakout. We also had the Bank of England yesterday, surprise rate hike, but the markets are sort of consolidating a little bit today, not pushing that on. So perhaps there is a question mark over whether this is a policy mistake from the Bank of England. And also the ECB coming out with a rates decision as well. Little bit cautious in starting to taper asset purchases. But again, the euro strengthened on the back of that. But once more, hitting resistance and maybe can't find the traction in that move. So we don't really see a great deal changing on the back of this. But what we are seeing today is risk negative sentiment coming through. It seems as though that these rallies are selling over and pressure is sort of potentially going to the downside once more as we come to the end of the week. Now, we've got the Eurozone final inflation numbers today. Not expected to see any revisions from that data. So the charts we're looking out for, I'm having a look at the euro-dollar chart, which has come bumping up against resistance, but again, cannot find that breakout. Looking at gold, gold has found a recovery as that risk appetite has just fallen over. The dollar's just weakening a little bit, so gold has found support on that. And also finally looking at the DAX, rally yesterday, hitting resistance, falling over once more. Again, looks a little bit range bound. So let's have a look at the charts. So looking at the Infinox MT5 platform, just going off with euro-dollar for a start, and we can see these 2 days in a row of euro-dollar gains. We saw the Fed meeting where the euro-dollar hit that $1.1223 mark and then rebounded off that. Helped higher by the ECB yesterday with a strong candle, but again up against resistance, coming up towards 1350 area, 1380 is the key resistance, and it just seems as though that the market is just losing traction again and starting to fall over once more. And we can see that on this hourly chart, sorry, 4-hour chart, there is this prospect still of a base pattern, but it just, you'd think that it would be going higher on the back of that ECB decision, but it just hasn't managed to sort of sustain any real traction, just falling over once more this morning. So ranging still, but the disappointment that I'm seeing in this chart is the fact that it hasn't broken out. So that could be a sign that maybe it's once more ready to sort of sell off once again within this range and fall over. So the daily momentum again looks like it's sort of coming up to a resistance area with that 50 point on the RSI, positions where selling pressure has previously come through. So that's a concern for me as well. Onto the gold chart, well, 3 positive candles in a row now on gold as the market has moved higher this morning. Previously, 1790, time and time again, 1790 has been resistance, failing points around that. But yesterday, bull candles straight through it and again continued higher above 1800 bucks today, improving on the momentum as well. Closing above 1800 bucks would really start to put this one on a more positive footing. But essentially, you'd want to see it above 1815, I think, to really suggest a decisive breakout. Looking on the 4-hour chart, it just continues to go a little bit, coming up towards a bit stretched on that 4-hour RSI now. And again, that is coming up towards that resistance around 1810, 1815. So be careful with that, I would say. But if it can hold above 1800 bucks, you're then starting to look more positive on the outlook. I think then you maybe even start to think about buying opportunities. But certainly for now, it's improving, but I need to see confirmation, I think. Finally, with the DAX, again, another bull failure yesterday, up around that 15,800 mark. It rallied early doors. It's then started to fall over. And as the US trading started to kick in and the market has just sort of maintained this ranging feel to it. You can see that range on this 4-hour chart. Seems as though 15425 is the support, 15,800 to 870 area resistance coming in. This is becoming an increasingly important range, I think, for now on the DAX. If it now starts to close underneath 15,425, well, that starts to take a decisively sort of more negative angle to this chart, because I sort of talked about this before. You've got these ranges, mid-range. You've got the resistance coming in at an old pivot area and the support coming in at an old pivot area as well. So if you start to break decisively below the support or above the resistance, you then start to get direction. But for now, RSI on the daily very much sort of hovering around, not really sure what to do. So the fact that the bulls have failed again is not great, but still not decisive selling pressure either. So still a bit middle of the road there on the DAX. Thanks for watching this video. I hope you found it and gives you some sense towards what has been a very hectic trading week. I'll be back on Monday where we're going to have the run up to Christmas and see how markets are set up for that. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much and have a good weekend, everyone.